Welcome back, traders. Here, Chris Caprice, SecondSkiesForex.com. We have another video here, which is on the different styles of trading. And this is just to kind of give you kind of an overview of various styles of trading that you can adopt in terms of how you want to approach the market. This is a super important topic because the style of trading that you adopt is going to need to be something that is really kind of resonates with your personality, your style of thinking, your psychological strengths and weaknesses, your availability as well. It's important not to try a style of trading that's going to overtax you mentally or that you just don't have the time and hours to put in. So this is really important to understand these various styles of trading and how they might relate to you and your personality and what's most natural for you. So let's jump into this. So the first style of trading, and one of the more common styles of trading that I want to talk about, is swing trading. So the whole point of swing trading is that you're going to try and capture these kind of swings in the market. These swings are very common where the market just kind of has this ebb and flow between the buyers and sellers. You know, one of them is really strong in the market and one is weak, but the time, the market kind of changes control for short periods of time between the buyers and sellers. In this case, the sellers are in control. They push the market down. Buyers come back a little bit. There's some profit taking by sellers, and the sellers come back in and push it back down. Buyers come back in, take a short-term control, and sellers come back down, and then buyers come back in control. And this kind of ebb and flow happens in the markets. And it creates these swings, and swing traders are trying to capitalize on that. So swing trading can be done from higher and lower time frames. It doesn't really matter. For your reference and ours, we consider higher time frames to be anything from the 4-hour chart and up. So 4-hour, dailies, weeklies, monthlies, and lower time frame for us is generally 1 hour and below. So the whole goal of this in swing trading is that you're trying to capture these kind of major swings. And that means you could take both sides of the market, but your overall goal is to kind of trade with the more dominant flow of the market. You're looking to kind of capture these individual swings and trends that you see in the market. Most often than not, swing trading is done where you can hold positions for days, maybe weeks, because sometimes these take days to manifest. I mean, this took, over a month to manifest. This swing up, took a couple weeks. Again, this took, 3-4 weeks. So you can be holding trades for days or weeks. You can be a short-term swing trader who's really just trying to capture smaller moves in the market, but these smaller swings. And there you'd be holding for hours, maybe days. But on average, you're generally holding things for a few days at a time. So it requires a little bit of patience, and you have to be willing to hold your positions overnight. So that's something that you psychologically have to get comfortable with if you'd like to do swing trading. Now, the next form of trading is day trading. And day trading is really trading from the lower time frames for us. This is the 1 minute down, or the 1 hour down, to the 30 minutes, 15 minutes, 5 minute, 3 minute, 1 minute charts. And really your entire goal with day or intraday trading is to really capture as much of the moves of a particular day. So if the market is selling off aggressively that particular day, you're bearish, you're trying to capture from that high momentum move in the markets. And so the general kind of approach here is that you're going to be holding positions from minutes to hours. People who tend to be less patient, this tends to really people tend to gravitate towards this if they have kind of like a short level of patience and they don't really like to hold positions for long periods of time. These are the types of trading styles that people tend to gravitate towards. And so you're going to be holding positions for minutes or hours. Generally, you are not holding positions overnight. So that has an advantage in the sense that you're not going to have overnight risk, which means that while you're sleeping, if something happens, an announcement happens and changes drastically the direction of the market, you don't have to worry about it because you're not in the market. All your positions are generally closed by end of session or end of day. This is a general form of day trading. The downside to this is that it's hard to make money while you're sleeping if you're not holding positions overnight. So sometimes those moves that happens overnight can actually go in your favor. And so, that's kind of where swing trading or holding positions overnight has an advantage, because you can make money while you're sleeping. So you really have to kind of see the differences between these two and which one you gravitate more towards the most. Day trading requires you to kind of think faster, analyze faster, calculate risk faster. You really have to kind of be on point with that, really kind of a fast thinker. And if that's not you, then that's fine. We recommend swing trading. But if you're someone who can do that, you can kind of make calculations really quick, your mind is really fast, and you tend to be less patient with things. You like to kind of see if you're right or wrong within a few hours or within the day, then you probably want to lean more towards day and intraday trading. The next style of trading is what we call position traders. And so these are people who trade from the higher time frame charts only. We're talking daily, weekly, monthly. And your kind of approach and goal is to capture these really large trends that can take weeks, months, or years. This tends to be one of the more or less kind of common styles of trading, but it's really good for people who are super patient. They don't really want to get caught up in these individual swings. Like, they feel like, hey, if the market's bearish, I just want to ride it all the way down. I don't really care about these little bounces or swings or anything like that. I just want to capture the large move. And if the market's turning, I want to ride it all the way up. So the advantage of this is that you kind of don't have to worry about small or medium-term swings, because as long as you're getting the overall direction right, the market should move in your favor. The downside of this is you have to be really patient. Sometimes you have to hold this for months, maybe years. And so, there is kind of a trade-off. It also means that you tend to be less active in the market, but you don't really have to be. It's more of like you're taking a few swings at the market instead of like dozens or hundreds of swings per year. And you only have to be right maybe 5 or 10 times a year to make a lot of money on this. And so it's really a different style of trading, and it's important that you understand the kind of strengths and weaknesses that go with this so that you can really kind of see whether it matches up with you or not. One other style of trading that I kind of want to talk about is carry trading. So we've kind of talked about this before, that every single currency has its own benchmark interest rate. So in this example, the Swiss franc has a benchmark interest rate of minus 0.25%. That's that's set by the central bank. And the US right now is at 2.5%. So the difference between them is 2.75%. Now, if I'm buying a trade where I'm long the US dollar versus the Swiss franc, then every day that I hold that position past 5 p.m. New York, I'm going to get carry on that. I'm going to get interest carry, because technically every time I hold my position overnight, then I have to get interest on that because I am holding that position overnight. And that's how banks calculate interest. Like, for example, if you put money in a bank today and then you take it out within the same day, you're not going to get interest on that. But if you hold it overnight, you're going to get interest on the funds that you hold in that account. The same goes for trading. So carry trading is where you are trying to take advantage of directional trades that also have positive carry. So let's say you were watching the dollar Swiss, you're kind of watching this breakout, and then kind of hits resistance, and then support, and you say, I'm in, I want to go long, I think this is going to hold here, and I think it's going to go up. So you buy it around 94, and it starts rising to parity here. Not only are you going to make money on the trade, but every single one of these candles is a daily candle. So every day I'm in the market, I'm taking advantage of that positive 2.75% interest rate differential. This was a very, very popular trading strategy in my early years, so between 2000 and 2006, because the interest rate differentials between certain countries were massive. Some of them were 4, 5, some of them 7%. So you were gaining that 7% interest rate differential per day. And if you got the direction right, then you were really getting two incomes. Carry trading as a strategy or style is an opportunity to get two incomes. How is that? Because you're making money on the direction of the trade and you're making money on the interest of the trade. So this is really a style of trading that you're going to be holding positions overnight, so you have to be a little bit more patient. You're really trying to get the overall direction right, because if you get the overall direction right, you make money on that. but then you also make money on the carry. The longer that trade holds, the more money you make per day on the interest rate differential. So this is a very interesting style of trading. That's something you want to consider as well. So with that being said, that covers kind of the main styles of trading. Obviously, it gets more nuanced than that as you kind of develop and start to really kind of explore them a little bit deeper. The most important thing when it comes to style of trading is finding one that naturally suits your personality, naturally resonates with you, and also is something that you have the time needed to really make it happen. Day trading often requires more kind of time intensive stuff. So if you don't have 2, 4, 6, 8 hours a day to sit at the computer and really churn out a lot of trades, then day trading probably isn't for you. You might want to consider swing trading or carry trading or position trading. But maybe you're the kind of person who's really impatient and you got several hours a day to sit behind the computer and make lots of trading decisions. Well, then maybe you want to consider day trading. So it's really important. The most important thing is that you find a style that resonates with you naturally and that you have the availability for. If you do that, then you can start to really kind of hone in on what skills you'll need to really develop and amplify that particular style of trading so you can get the most out of that and the market. So with that being said, I hope you enjoyed this video. I hope you learned a lot from it, and I will see you in the next lesson.